your bounce back loan is causing you problems, you are worried about making repayments, and the pay as you grow option is not going to help you, you need to seek professional advice very, very quickly. I'm on the podcast with a very reputable company now. I'm sure they will be able to help you, and just have a chat, get out of your own head, speak to somebody who has trodden this path before and has been through the process.
Welcome to the Business Helpline features. The aim of these interview features is to provide insight into what it's like for businesses struggling out there across Britain. But we also hope to provide some solutions to those problems. We want to bring people together in a friendly, non-judgmental and educational community. So that means we want to hear from business directors, business owners, accountants, and those who are actively going out of their way to save businesses in a financial struggle. And the best way that we can do that and build that community is by hitting the subscribe button down below. Hello and welcome to the first episode of our new set of features on Business Helpline. The idea of this really for our YouTube channel and for our audience is to give you an insight into all things business debt. And I tell you what, there's a lot to go at really. There's a lot to go at. Take things from here, take things from there, take things from everywhere. And we've got a familiar guest if you were a fan of the Money Support Group features, which happened quite a while ago now actually, but Chris Worden is back. Chris, how are you doing?
Jonny, I'm good. Thanks for inviting me on again, mate. My voice is a little bit croaky. I was watching my team last Tuesday and I screamed my lungs out. So I'm just recovering vocally. But other than that, I'm top, mate.
Fantastic. Just for context, Chris's team is Preston North End. We were just reminded of that off air. My team is Burnley. I didn't have as much to shout about at the weekend, but last Wednesday, I say last Wednesday to when we are recording, which was against Everton, was a rather good result that now seems to have been a bit diluted in terms of recent matches after that. Chris is the director of First Business Rescue, a director focused insolvency solutions corporation. And how's business going, Chris, for you at the moment?
We're very busy. We have a lot of inquiries to get through. So it's just there's really tough times out there for UK directors. We're working longer hours. We've got people working over the weekends, and it's an incredibly busy time for, I think, the industry, across the industry.
Yeah, absolutely. There's so many things at the moment, so many troublesome situations that could bounce up like whack-a-mole for business directors at the moment. You think you've solved one thing and another thing pops up. And today we're going to be looking specifically at bounce back loans. Bounce back loans actually really seems such a long time ago when the pandemic first started. Well, I don't know if it does actually, to be fair, Chris. I mean, old time seems to have molded together in such a weird way over the past few years. But if we could go back right to the start then, when Rishi Sunak, Chancellor of the Exchequer, came out with the bounce back loan scheme. Well, obviously, I've been writing about this for months and months and months, well, maybe years now, actually, to be fair, with my work with Business Helpline and also other companies before that as well. But Chris, you're no better person to talk to about bounce back loans than you. What were bounce back loans all about when they came into play?
Well, they came into play in May 2020, and it was a way that the government could get some liquidity to the businesses in the UK. So they were launched. I mean, we went into lockdown, I think it was the 27th of March, just over 2 years ago. And the schemes were rushed out and available to apply from in May. And what you had is very, very simple application process. You would go onto your bank and you would apply for a bounce back loan. You was allowed to apply for up to 25% of your turnover in 2019, and it were capped at 50,000. if your business was incorporated after the 1st of January 2019, you was able to estimate your turnover. So you put some information in. It was all self-declarationed. That's not even a word. What's self-certified?
Self-certified.
Self-certified.
There we go.
And then 2 days later, the funds dropped into your business account. So yeah, that's and they ran. Was it till March 2021? I think the last applications, they closed in March 2021, and I think there's about 1.5 million bounce back loans that were dished out during that time. So a lot of money.
Yeah, well, specifically 1,560,309. Just for anyone out there who's curious about the exact number, but or if you're less bothered about the specifics, about 1.5 million, sorry, like you said, Chris. But that actually equates to 47.4 billion pounds. 47.4 billion pounds. And these were statistics taken in July 2021. But as Chris rightly said, the bounce back loans had stopped then, so they haven't just suddenly arisen and gone up. So you've perfectly summarised that, really. You can borrow up to 25% of your turnover from the previous year or your estimated turnover. But you did say there, Chris, you did say that, quite rightly so, that the checks were so minimal. The checks were so minimal on this particular thing. Now, that meant, of course, that there was the opportunity to maybe blag it a little bit, I guess, or maybe even not even blag it, but accidentally stumble onto something you think is money to help your business, when in actual fact, it is a loan, it does need to be repaid. Do you think the ease at which it was available was a little bit mistaken and a little bit wrong, even though businesses were across the board in Britain were facing an unprecedented crisis?
So I'm just not sure how else they could have done it, because people's revenues fell off a cliff for most industries at the end of March, with bills still to pay. So I think it was the best that could have been done. I certainly wouldn't have liked that task to drop at my doorstep.
Yeah.
But it was, the process was just so simple, but it had to be, because if there was additional checks, then the money wouldn't have got out there. And it's such a difficult question, Johnny, and it's being debated by people much brighter than me.
They exist?
Yeah. I think it just needed to be done. But we are now dealing with the consequences of that easy application process, because it was open to abuse, and a lot of people did abuse it.
Well, yeah, I think some people probably deliberately did so, and some people maybe accidentally did so. I think it's one of those situations, really. But of course, with the bounce back loans, we've said that they did a lot of good there. When you say you've got the 47.4 billion that was handed out, and I'm sure of that 1.5 million roughly set of businesses, then actually quite a lot of those would have benefited, but obviously not all did. Hence we get the bounce back groans, as I call it, and I think that's probably a fair little tagline to go with. What have you found, Chris? What have you found have become the main stumbling blocks or the main problems when it comes to people struggling to repay the bounce back loans that they've borrowed?
So I think there are businesses that just haven't recovered from COVID. There were, a whole world of people, one man and one woman bands, due to the IR35 tax reforms, never needed their business. Couldn't use a limited company. There are businesses now. I mean, crikey, if you're in the hospitality sector and you're about to renew your gas and electricity contracts, it's highly likely your profits have been wiped out. Yeah. It's just all over. This inflation is killing so many businesses. I was in a really popular restaurant yesterday. You would normally not get a table, and I rang up at 2:30 and I got a table an hour later, and the lady said, normally you cannot get a table in here, and Sunday it was empty. So I think people, so in answer to your question, there's been a load of stumbling blocks, and it's mainly cash flow, isn't it? You know, if people, not everyone has bounced back.
No.
You know, that's the key thing here. Not everybody has bounced back. So we're seeing such a wide range of difficulties that people are facing. Some's linked to inflation, some's linked to some is linked to their industries not really recovering since COVID. That there's you know, a multitude of reasons as to why they might struggle repaying the loan. I think the important thing is, what do you do if you're struggling if you are struggling?
Yeah, absolutely spot on. I mean, just you touched on hospitality as well. I think in the spring budget, I believe that VAT returned to normal rates in the hospitality sector, which was a bit because it was temporarily cut, wasn't it? As part of some form of relief by the Chancellor and the Treasury to help those struggling in hospitality. That's now gone back to normal, I believe. So again, that's another whammy, another hit for businesses that have really been struggling. And like you just said, Chris, many local businesses, many local restaurants within that area are still suffering those effects now because inflation's hitting them, inflation's hitting everyone, and less people can now go out and spend willy-nilly, maybe how they used to. So there are accumulation of problems there. You touched on actually what to do about it. Now, there was an option set up, quite amusingly, I thought, called the pay-as-you-grow scheme, which I thought was quite a clever play on words. But the pay-as-you-grow scheme actually was designed to help people out if they were struggling to make their repayments. Now, Chris, again, no better person to explain the intricacies of pay-as-you-grow than yourself, but also, as well as explaining what pay-as-you-grow is, Chris, do enough people who borrowed bounce-back loans know about pay-as-you-grow?
No, they don't. I was on the phone to a guy today who's rang up for liquidation advice, and that wasn't the right advice for him. He just had a short-term cash flow problem. So the pay-as-you-grow was brought in, as you've said, to help businesses get basically restructure these bounce-back loans. So there's a number of options that you can use to ease cash flow. You can restructure your bounce back loan from 6 years to 10 years. Okay, that's going to bring your costs down by almost half. If you are really struggling right now, you can take a 6-month payment holiday, and you will not have to make any repayment to that loan for a full 6 months. In addition to that, you can also do interest-only payment breaks. So you could go on interest only on your loan for 3 times during the loan for a period of up to 6 months each. Now, obviously, bear in mind when you use any of those options, you're going to pay more interest. But listen, the loan is peanuts. You know, it's 2.5%. It's not personally guaranteed. Now, if you want to take advantage of any of those options, what you need to do is go on to your bank that issued the loan. And in that, it's slightly different for every bank. But when you go onto the account where the loan sits, there will be some options to extend that loan and give you a little bit of breathing space. I think I've covered them all there.
I think you did, and wonderfully summarised. If you do need any help with any of those options, and Chris has summarised it wonderfully, then get contacting the good people at Business Helpline. Sorry, Chris. But well summarised. Very well summarised. But of course, very, very well summarised, and very, very important that you remember about this and you consider this, because hey, we don't want you going down the wrong pathway when there might be a simpler solution right on your doorstep, like the pay-as-you-grow scheme for anyone that picked up a bounce back loan. So coming into play after the bounce back loan, actually, Chris, was the recovery loan scheme. And the recovery loan scheme had numerous similarities. If you want to search those, again, this is the recovery loan scheme feature. This is the bounce back loan. If you want to look at the recovery scheme specifics, then do have a look at that. But to me, Chris, I thought it seemed a little bit like the bounce back loan 2.0. Would you concur?
So they're harder to get. They're much harder to get a recovery loan scheme. And so obviously, I don't work in the finance sector, but I refer clients into my contacts in that field on a daily basis. Now, the headlines of the recovery loan scheme were fantastic. Yeah, it's a replacement for the bounce back loan. You don't have to personally guarantee it. You know, quick decisions. They're not quick decisions. In my opinion, the recovery loan scheme, it's very much like a normal loan application. And if your business has any blemishes, any history of bad payments, then you're going to get turned down for that recovery loan scheme. And obviously, the interest rates are a hell of a lot higher. Now, having said that, I do know lots of people who have been successful in obtaining a recovery loan, and you know, let's look at that. Once you've got the recovery loan and it's under 250,000, well, there's no personal guarantee attached to it. Now, the government, I did write some notes on it. I think the government have guaranteed 70% of it to the banks. Forgive me on the numbers, but you as a director don't have to sign a personal guarantee on anything under 250,000. So obviously the business is fully liable for it. But if your business gets a recovery loan scheme, the business fails, the director is not going to be called upon to pay that money back. Now, anything above £250,000, you may have been asked to sign a personal guarantee, but your primary residence can't be at stake. So it's one of those, I strongly suggest recovery loan scheme. If you're looking for one, go to your bank first. And if your bank turn you down, don't give up hope that you want to go to a specialist finance broker and they will go out to the market on your behalf to try and fix you up with a lender. I was reading something the other day, actually, that there's talk that the recovery loan scheme, which I think ends in June or July this year, it's going to be made more permanent. So is it bounce back loan 2.0? I could see why you call it that. But I really think it's going to separate a lot of businesses. Many businesses who are really struggling and are insolvent, they're not going to be able to get a recovery loan scheme. If you've been able to get one, the banks have looked at it and thought, you know what, this is viable going forward. It's good that there's no personal guarantee attached on the 250 as well.
Yeah, I didn't want to stop you in full flow, Chris, but 80% government guarantee, not 70, but close enough.
Thanks, Johnny.
Yeah, close enough. So really well summarised, quite articulate there into breaking down the differences. And you were quite right, actually, taking a question that I had coming up was in a report by the Financial Times and other reputable outlets has looked at the situation and actually said that the Treasury and the banks want to come up with an arrangement to make borrowing like the recovery loan scheme a more regular, permanent thing going forward, which of course is supposedly which will be to encourage businesses to borrow more. Which will encourage businesses to go down this route if they feel they are in some financial difficulty, or if they want to get ahead, I guess, in terms of maybe their competitors, or want to push forward at a more rapid rate, more rapid growth over the years. What do you think about making this kind of thing, this kind of borrowing, a permanent feature in the UK? Do you think that's a good thing, a bad thing? You were sort of answering that just then, but sort of let's get a definitive stance on it.
So borrowing money in a business is good if it's going to work. Yeah. If you're borrowing money to grow, that's good debt. If you're borrowing money to stay alive, I think that's very, very questionable, because I see so many directors who really should have sought insolvency advice way back when, and what they've done is they've borrowed more money, and when they've borrowed more money, they've signed personal guarantees, they've given security of the family home, and it can get nasty. So it's a case-by-case basis. Sometimes you do not want to be throwing good money after bad. But yeah, I mean, you've hit the nail on the head. If your business is growing and you can service the debt, then finance allows you to grow, doesn't it?
Yeah, of course it does.
And grow more rapidly. But always, if you're borrowing to get out of the hole, seek professional advice first.
Yeah, absolutely spot on. Really, really, really good. And again, just to promote professional advice, business helpline, they've got your back. I mean, you've also got their back, I'm sure, Chris, but so do we. Yeah, I think we start on bounce back loans. We make a lot on bounce back loans. I guess it'd be a nice way to finish, and you've already spoken at length about bounce back loans generally, Chris, but if you were to summarize what your general thoughts are on bounce back loans, the good, the bad, if you would summarize in 30 seconds, what would you say about them?
Well, in my industry, in my line of work, what I'm hearing is the bad. And if your bounce back loan is causing you problems, you are worried about making repayments, and the pay-as-you-grow option is not going to help you, you need to seek professional advice very, very quickly. I'm on the podcast with a very reputable company now. I'm sure they will be able to help you, and just have a chat, get out of your own head, speak to somebody who has trodden this path before and has been through the process. Yeah, take advice early. The sooner you do, the more options that you have available.
Smashing, perfect. Thank you for your time, Chris. That was wonderful. And that is our feature on bounce back loans.
Top man. Thanks, Johnny. Thanks for inviting me on, mate.
No worries. Well, that's the end of the video. I hope you enjoyed it. Be sure to give us a like, a comment, and hit that subscribe bell if you can. Hitting that subscribe bell not only helps us broaden our reach on the planet of YouTube, but it also means that you will be able to keep up to date with all of the latest videos that come from us here at Business Helpline.